You're still watching Business Nigeria. Well, let's take a look at the global stocks now. Markets across Asia rise with signs that trade war may not be as damaging to global economy as feared. Well, President Donald Trump's surprise decision to pause the tariff he had imposed on dozens of countries brought relief for battered global stock markets. Asian markets rose sharply on signs that the U.S. president's trade war may not prove as damaging to the global economy as we all feared. Well, European markets, which had closed when Trump announced the 90-day pause, jumped at the start of today's session. Trump's U-turn, which came less than 24 hours after new tariffs kicked in on most trading partners, followed the most intense episode of financial market volatility since the COVID-19 pandemic. The upheaval raised trillions of dollars from stock markets and led to an unsettling surge in U.S. government bond yields. Our senior portfolio manager at Afrinvest West Africa Limited, Mr. Babajide Atolagbe, is here with me on updates on the reaction, of course, to the global trade war. It's good to have you join us on Business Nigeria.
Hi, good afternoon. Thank you for having me.
Well, it's good. I'm thinking maybe Donald Trump had us talk about this, I think 2 days ago, when analysts were saying that I think Donald Trump should just pause on the tariff war. But we've seen him also continue to retaliate. China, of course, retaliate, exempting China from the 90-day pause he had ordered. But first, let me get your thoughts, really, because we've seen reports show that U.S. stocks skyrocket higher after Trump signals shift in trade. But let me get your thoughts first off as to what you think about what's playing out in the global market.
Thank you. So what we're seeing in the global market has been, largely anticipated on our side because we had experienced Trump 1.0 back then, and then we know the characteristic, the sides of Trump and how he manages policies and affairs, in government. So we're not quite, surprised about his approach. But when you look at the performance of the stock market, in the bonds market, you see that the volatility in that market has heightened. And when you see that type of volatility, it signals fear. It signals, policy, uncertainty. It signals people not sure about the, future and the direction of the economy. And that is what has happened in the last 4 to 5 trading sessions, whereby, stock prices have been swinging, has been extremely choppy, moving sideways. And it is on the back of what Trump is doing. So we're quite, aware of Trump's approach, which is, the carrot first. I beg your pardon, the stick first before the carrot, approach, whereby, he goes all out in terms of, his approach, and then gradually he starts to modify, comes back to the table and begin to accommodate some ideas and thoughts from counterparties. So that is what he has been doing. And that is not what the financial market wants to see, right? Investors really want to be sure that, these policies will not be, overly aggravated. It will not lead to a complete halt of the economy. It will not, decouple the entire, trade supply and infrastructure. Investors are pretty much scared about, the outcome, the magnitude at which these policies could impact the existing status quo. And that is why you see the stock market moving sideways. On days whereby he announces, strong tariffs, the market is tanking significantly. And on days where, he announces some, relief, you begin to see that appreciation. For example, yesterday, we saw the stock market, S&P, gaining as high as 7%, which is extremely material. In trillions of naira, in trillions of dollars, I beg your pardon, within a couple of hours. So the current reaction in that space, explicitly shows how sensitive investors are to, policies of that nature.
Of course. So are you saying that it's the worst time is over and recovery seems to have come back to the market?
Well, the recent trend we've seen may suggest that the worst is over. And then if we take a look at the Trump's disposition now to the other 75 countries that he has, discussed a moratorium with, that is somewhat, interesting to know, and it's bullish for investors. But then if you see that Trump is still intensifying the tariffs and the attacks on China. And China is extremely significant in the global
Global
economy in
trade.
terms of supply, import, exports, in fact, in terms of labor, in terms of so many things. So if you have the two largest economies in the world at loggerheads, throwing tariffs at almost every market day, it becomes very troubling. And what we've seen so far are just trade tariffs, are just trade wars. These countries have the capacity to, move beyond trade wars into other type of wars that could even bring, much more uncertainty into the market. Speaking of nuclear wars, speaking of, technological wars, speaking of, market wars, a lot of angles are actually at play at the moment. So we cannot necessarily say the worst has come, but with the approach that we are seeing that China is still the major target, the rest of the world can have a temporary relief while we see how far China and US pushes this agenda.
Because I was going to ask really that considering how China and US have decided to take on each other, because of course, they are the two world's biggest economies that we have. And I'm just thinking, while this two elephants fight, what would be the effect on a country, for instance, like Nigeria, where we are also very big on oil exports, imports as well. We're also very big on exporting importing products and exporting products. What will be the effect really on countries like Nigeria or developing countries, the ones that we have in Africa and Asia?
Yes, to the first question on why, China and US are loggerhead. I mean, one of Donald Trump's major, rhetorics for making America great again is to reposition the America structurally in terms of, making America the epicenter of global manufacturing, right?
Hmm.
And China has been taking that stage for a number of years now. And Donald Trump is trying to use trade tariffs to reposition US, whereby people don't go to China again to manufacture things because if you are manufacturing in China and seeking to export into the US, it becomes much more expensive because of the tariff. So he's using that as a leverage to make sure investors, manufacturers, global labor, global talent, all of those things are domiciled in the US so that can, expand the US economy. The second point is the fact that Donald Trump is heavily interested in energy dependency whereby um, you know energy price shocks are not dictated by what's happening across the rest of the world, and he has been pushing that agenda since 2018 using the shale oil in the US. So he wants to make sure that oil prices are relatively low. He would like to take it to the lowest level in history so that would moderate the level of inflation in the US, and then the economy can pick up much more at a faster pace. So all of what this is policies are centered on taking America to the next level under Donald Trump's agenda. And for a country like Nigeria, with these trade wars here and there, the issues with energy and here and there. I think for us, the biggest crisis or the biggest exposure we have in this current global turmoil is the activities in the oil market, right? So between Wednesday last week and Wednesday this week, we've seen oil prices shave off as high as 7 to 6 points, right? Brent crude oil trading as low as 60, at the early hours of yesterday. And don't forget, Nigeria budgeted or benchmarked the 2025 budget
$75.
for crude oil, significantly above that level. So what that tells us is that the chances of experiencing revenue shortfall is increasing, and that poses a risk to budget implementation. Could lead to budget deficits, and then that could lead to inflation and so many other macro issues that would hurt or put a stop to some of the policies and the progresses that the current administration has been making. So it's a big deal, and it's something that policymakers in Nigeria are, seriously monitoring. I'm sure we're seeing the activities of the central bank in terms of ensuring, reassuring investors that Nigeria is well positioned and that those policies will, effectively yield the desired result. So Nigeria needs to find a way to be able to ensure that we are has shielded from all this global turmoil to the best possible way.
Will the Naira for crude deal, will it, bring some kind of positive change?
Well, the Naira for crude deal, there are so many dimensions to it in terms of availability, in terms of demand and supply, or what's available now. We understand that most of the future, crude, at least for the next foreseeable month, has been, transacted for forward activity. So, um, at this instance, we would really like to pay more focus or pay more attention on ramping up production rather than depending on, future, earnings. Ramping up production is very key because that means we have extra to be able to sell and to be able to, accrue FX earnings to be able to ensure the economy is properly and efficiently run. So other than Naira for crude, strategy that the government is deploying, we should also look to non-crude sources, which is much more sustainable and to a very large extent is not susceptible to, global risks.
Well, let's take a look at prices of commodities. Gold has been on an all-time high. Of course, do you see these tariffs affecting prices going forward?
Yes, the reason why gold has been, trending higher is because of, in periods of high uncertainty, in periods of lack of clarity in terms of economic growth, investors often run to safe haven assets, and topping that list is gold, and that's why we've crossed the psychological benchmark of 3,000, and it has been hovering, trading around that level for a while. In terms of outlook of gold, I think it is still largely dependent on how far and how well the Trump administration is able to manage the issues we're having now in terms of trade, because the more tariffs we have, the more barricades we have to the flow of international goods and services, simply means that the global economy is exposed to supply shocks. And we're not going to forget that the reason why we had inflation in the US as high as 9%, 6% in the last 2, 3 years is a function of supply shocks. So we don't want to get back to that place whereby central bank now has to tighten their policies, therefore deflating the price of risk assets. So for now, we still think that gold will remain at similar band, and the outlook of gold is largely dependent on how far Trump is able, or let me say, how far US and China are able to reach a sensible deal on on the trading part globally.
Just before I let you go, I would like that you give us your projections for like an overall outlook of the global and domestic markets, considering the reality we have on ground now.
Well, we still think that at the macro level, we've seen a lot of progress in recent times in terms of GDP growth, although it has not been necessarily exciting, but it has been decent. We still expect that to be the case, bearing any structural change in the economy as a result of the trade tensions that we're seeing. In terms of inflation in the US particularly has changed, has pivoted from the upward trend to a downward trend. I mean, just recently, about 30 to 40 minutes ago, the inflation for the month of March printed at 2.4%, which is the lowest level in a long time. So inflation is expected to moderate. Also, the labor market is a bit very choppy at the moment because the activities of the Dodge agency, the activities of of these trade tensions on employment is slowing down the job market, right? So unemployment numbers in the short term are likely to be very volatile. But overall, the economy is in a good shape, and the current financial market trend does not depict or show the current state of the economy. I think the current financial market, shows, the volatility as a result of trade tensions and all of that. So we still think that, most of the outlook we have for 2025 is still intact, other than the fact that, aggressive tensions between the US and China can now be the major downside risk to all of these projections.
Senior Portfolio Manager at Afrinvest West Africa Limited, Mr. Babajide Atolagbe. Thank you so much for sharing your thoughts on Business Nigeria.
Thank you.
Well, it's now time to review trading activities at the Nigeria.